Good afternoon, everybody. My name is Ona Alston Dosunmu. I'm the CEO and Executive Director of the California Lawyers Association, and I want to welcome the audience to Paycheck Protection Program Round 2, our 2021 update. As if you're tuning in, you know that in March of last year, Congress passed the CARES Act that included a very generous loan program that had forgivable loans attached to it. And in December 27th of 2020, an expansion and extension of that program became law. Before we sort of dive in and talk to our expert panel here, I do want to take care of some housekeeping matters. You may have noticed already that all audience microphones and cameras are muted. It's probably best for you to set your Zoom to speaker view, and that way you will hear from whoever is speaking at the time instead of seeing all the little squares. We are not offering continuing legal education credit for this program. This is really just a service to our members and to the legal community in the state of California. And we wanted to get this information out to the community as quickly and as efficiently as we could. We'll likely go for just over an hour. We've allotted 90 minutes, but we probably won't take that full 90 minutes. But there is a fair amount to cover. You're invited to put your questions in Q&A. Chat has been disabled, but we will try to follow along in Q&A. We've already received at least 4 questions via email ahead of time. And so I know that there are lots of questions out there, and likely even more. I understand that the Small Business Administration issued additional guidance just today. So this is certainly timely. So our panel today is Paul Notaras, who has joined us once before to have these same conversations. I'm going to let Paul introduce himself, Linda Geary, and Chris Karachale. And in that order, why don't, Paul, I let you introduce yourself, your firm, and you can say a few words about, sort of what your experience with PPP has been.
Hi, everybody. Thanks very much for joining. This is, I think, a valuable forum to sort of connect the dots with a lot of puzzle pieces from the federal, state, and local governments to support the economy and employment in the United States at a very difficult time. I'm with a firm called Financial GPS, and we help privately owned companies and their owners navigate their strategic and financial issues. PPP has been one tool in a portfolio of choices for businesses to consider survival and even prospering in this difficult 12-month period. And we're going to talk a little bit about those things. So thank you very much for having me today.
Thanks for coming back. Linda? Let's see. I think you're muted.
Thanks, Ona.
There
So
you go.
I'm Linda Geary. I'm one of 9 shareholders at Gilbert CPAs. I'm in charge of the firm's tax and accounting services departments, and I specialize in tax-exempt organizations as well as privately held businesses. Our firm currently has over 67 employees, even with COVID, and we do a variety of professional services. In 2020, our firm was recognized by Forbes as one of the best tax firms in America, so we were very proud of that. In the past 9 months, though, we've had an opportunity to provide assistance to a lot of our clients with COVID matters, specifically different types of reliefs that they might qualify, helping them understand the rules and analysis in applying for some of those programs. So I'm pleased to be here today and participate in this panel.
Linda, you left out a really important fact about yourself. For the benefit of our audience, in addition to being a shareholder at Gilbert, Linda is also the California Lawyers Association CFO. Chris.
Thank you, Ona.
Right, so my name is Christopher Karachale. I'm a tax attorney at Hanson Bridget in San Francisco, although since March, I've been here in my garage in Berkeley, California. I work on tax matters, both international, federal, and state and local issues for clients throughout California and nationally. I also provide corporate advice for businesses in California. It's interesting, I got involved with PPP stuff because I thought it would be helpful. We're always worried about various issues from a tax perspective, like when is a partner, when is an employee an employee, when all these questions, right? And so I thought, I'll just sort of like look at PPP stuff, so maybe it'll help, I can think through these issues, right? And then it's this rabbit hole, right? Sort of like Alice in Wonderland we fell down into. So now, we've worked on PPP stuff for our, since it originally came out, and many of my firm's clients have applied for loans and encountered issues. And so it continues to be an interesting exercise, right? Certainly to see the FDA trying to roll this out too, where it's just this disjointed stuff. So compared to the service.
And I'm not sure that any of us expected that we would be, still looking at probably several more months of COVID-induced, sort of shelter-in-place orders. And, had you told me in March that this was going to go on until the next year, I'm not sure. I guess we had no choice, but I don't think any of us were really expecting that. We already have 2 questions in chat. I'm going to look at those, but we do want to get through some basic information. And I'm going to start with you, Chris, and basically, ask, who's eligible to receive PPP loans now, and how has that changed from the original version of the program, if you will?
Sure, absolutely. So I'll go through sort of a general overview, who's eligible, and the sort of 30,000-foot requirements, right? And then I know Paul and Linda will add additional information, right? So, there's been some significant changes with this new round, right? And in fact, the overall, I guess, takeaway is that the restrictions have been, there's additional restrictions, right? So the general requirement now is that you can get a PPP loan if you have 300 or fewer employees and you experienced revenue reduction in 2020 relative to 2019, right? And so those 2 important distinctions. First, under the first round of PPP, it was 500 employees or less. Now we're down to 300 employees, right? So they're looking to go after smaller businesses, assist smaller businesses, right? There's attribution rules, there's lots of, but again, the big takeaway is if now they're going to try and help smaller businesses. Second, you have to show that you really had a reduction in your revenue, right? Gross receipts, revenue is a proxy for gross receipts. Under the old program, you didn't have to do that, right? There's this, and we'll get into this, I think, a little bit about how applicants had to certify or present information to show that, that the economic uncertainty back in March made the loan necessary. But now, right, SBA says, look, if you're going to go in for this second round, you actually have to show that there's been a reduction in your gross receipts, right?
So I've got 2 questions already that relate to this eligibility question, and I think you've answered them both. Someone sent us an email in advance and said, I opened my law firm in August of 2019. I did not hire my first employee until August of 2020. Will I qualify to apply for the PPP loan, or did I need to have an employee in 2019? I did not pay myself in 2019, so I did not qualify as an employee.
So he didn't have any expenses in 19, only 2020 expenses.
Well, it says that I don't know the specifics, and I realize that everyone's specific fact pattern is going to be really different. And I should just say this for the benefit of the audience. We'll do the best we can, but there's no substitute for consulting with an expert. It just says, did not hire my first employee until August of 2020. Apparently they started in 2019, they opened a firm, but they didn't pay themselves in 2019. Mm-hmm.
Yeah,
so their concern is that they didn't qualify as an employee.
I have that very issue with a couple of my clients. Happily, entrepreneurs starting companies post-March 2020. Yeah. And so in the cold, hard light of day, you can make a case for it. There are areas for interpretation, and I have a couple of them. PPP, and then we'll come back to this important point. PPP is a great instrument. It's designed, while you're flying the plane in a hurricane, and it's not perfect and it can't envision everything, but there are other tools available to business owners that may accomplish more effectively the need without the literalism within PPP. And so a bit later, I'll talk a little bit about the Economic Injury Disaster Loan Program, also from the SBA. That actually, I think, prepares the borrower who is really suffering with more support than the PPP. Because the example you gave is a valid example. I literally have examples like that, but PPP wasn't really designed for supporting the business. It was designed for stabilizing employment as the knife was falling in the economy, whereas the EIDL loan is designed to stabilize the business, not necessarily about employment. And so that is a program in the legislation authorized at the end of 2020. It was refreshed with funding, and applications are literally available right now to be able to apply on the SBA website. And I can talk a little bit about that either now or later, depending on how you want to sequence the topics.
Well, let's try to get through the basics. I've got another one, and this one is really heart-wrenching. Sole proprietor business with employees would be eligible to apply. However, the sole proprietor died from COVID in December. The daughter is picking up the pieces and operating the business effective in her name, just formed SMLLC effective 1/1/21 with the new, albeit continuing business, be eligible to apply despite technically not having just started. So I guess this kind of goes to different kinds of kind of reorganization. My guess is no, but what do you guys think?
Well, I guess if she formed a single member LLC, right? So it sounds like her mother owned it as a sole proprietor, no business entity, right? And then she's formed a new single member LLC to run the business. I think that's a separate business, right? I'm not sure that she can show that the expenses incurred by her mother's business as a sole proprietor, tie in, if she formed a single member LLC, she went and got a new EIN and everything, unless, if the contract's transferred over, there might be an argument there, but I guess it's going to be a stretch. That's what I Linda?
I don't know. I'm wondering about like the successor employer, kind of rules, if there might be an opportunity to dig through that and see if there's any basis to apply the same philosophies and rules.
So I think what these, I'm sorry, go ahead, Paul.
I was going to say, I agree with Chris and Linda. I think that the literalism of this program doesn't really fit this very genuine example. And I feel like there's probably other things that can be more effective at meeting the need that, don't make someone contort how they present the business.
Good feedback. And I was about to say, I think that these few questions that have come in, and they are piling up in chat, and we're going to try to get through the basics of the program, but really underscore how important really talking to an expert, I think, can be in this circumstance. So we've kind of talked about who is eligible to receive these loans. Again, the loans are forgivable, which effectively turns them into a grant. And I want to talk a little bit later about, what kind of documentation you need for that. But Paul, am I correct that they have also changed the rules around who can make them?
Yes. If you follow the press, there was some grief that while flying this plane in a hurricane and fixing the wings, it wasn't perfect. And so there was a lot of thought in this redesign that we would address some of the fundamental issues of fairness and access. People tend to forget that in the spring of 2020, it was hard to find banks willing to sign up for this. And there were issues about why the banks did that. It wasn't because they were evil. It was because there were issues about their fiduciary responsibilities with their bank charters. But anyway, the government has worked very hard to bring a pretty broad portfolio of lenders to the table. I think at last count, there were over 5,400, as they call, participating lenders. And that includes not just banks that can make the loans and, if it turns into a loan, carry it on their books, but also intermediaries that can place the loans. And then in particular, with a focus on helping underserved communities and business owners, getting community institutions and smaller community banks very much involved in the loan process and giving them the ability to feed into their local communities more effectively than probably some of the big money center banks. And so I think that should alleviate some of the issues we had about A, access, and B, the other thing that's done to help access is they've capped the loan amount in PPP2 to $2 million. So some of the perceived fat cats are not going to be at the trough again.
So $2 million max cap.
Loan amount, right.
So Linda, we've talked about who can get the loans and where you can get them from. How much can you get? It sounds like 2 million max. And do you have to pay it back? And what, what can the funds be spent on?
So generally the maximum loan amount is $2 million, and it's a computation of 2.5 times qualifying payroll costs or 3.5 times qualifying payroll costs for borrowers that are in the accommodation or food service industries that have 300 or fewer employees. For applicants that are requesting more than $150,000 in the loan amount, they actually have to provide supporting documentation with respect to a reduction in gross receipts. For those requesting less than that, the substantiation will come at the time of forgiveness. Do you have to pay it back? Well, I know most borrowers are probably hoping that they don't, right? There's going to be the automatic process for forgiveness. That threshold is increased from 50,000 to 150,000. And in order to qualify for the forgiveness, at least 60% of the loan amount must have been spent on the qualifying payroll costs. It's a pretty straightforward process for small loans, right? There's a kind of an abbreviated one-page application where you have to describe the number of employees that you were able to retain, estimated total loan amount spent on payroll costs, total loan amount and such. And then also the borrower still will need to attest that they have accurately provided the required certification and compiled all of the loan and compiled all the loan documentation and so forth. So I don't want to lose sight of the certification process because I think that's still part of the new second draw bit.
And
so, please go ahead.
And if I may, as a non-attorney, to build on Linda's point, which is really important, the owners are signing a document with the federal government. Don't play games. Not that anybody would.
I like the way you've put that, though.
I've seen this. I've seen this with my own eyes, and I welcome you to find it. The federal government has literally said in writing, on record, "Hey, if you make a mistake, we understand that." So they're not trying to zing you if you're not a tax expert and don't have Linda's genius to make sure it's 1,000% accurate. They know that people make mistakes and people are trying to do this on their own, and it's well-intentioned. If you're well-intentioned and you make a mistake and you make a certification, the federal government has literally said, we understand and we expect some of that. But if you make a certification and things are not kosher, that's a very different situation. Right. And you've also authorized the SBA to speak with the IRS and other federal agencies when you sign these applications. So do your homework.
I want to make one other point here also, Ona, and is that the qualifying expenses have expanded, right, with this new relief, right? So besides the occupancy type costs that were allowable before and personnel costs, there's some operational costs that would be allowable. So that might be software, HR and accounting software. If an organization incurred some property damage during 2020, different types of supply costs, costs that an employer may incur to provide workers with PPP. So I just wanted to make the point that there are expanded qualifying costs that can be, that the proceeds can be utilized for.
Chris, you wanted to come in?
No, no, and right, just to add to, I'll respond both to what Paul said and then, right, the other important thing is don't forget that under the prior version, you had to expend 75% of the cost
Right.
on payroll, right? Now, the mechanics have shifted. You only have to spend 60% on payroll. And then I think it's real interesting, as Linda said, right? If you go out and, you put in, sneeze guards in your office, right? That's a good PPP expense. So it shows that Congress is being responsive to these, the changing dynamic. I guess, Paul, I want to just respond a little bit and push back. I agree with you that the government is saying, hey, look, no harm, no foul. If your intent is to do the right thing, but I have to tell you, that like under the first round, it's very hard because SBA is rolling out rules just kind of whenever they feel like it, right? And so, we had a lot of clients going through mergers or selling parts of their business, right? And we didn't get guidance until October that told us about how we had to respond, right? What we had to disclose to the lender or to the SBA itself. So, I may be less sanguine than you are, right? It's true that the government's going to say if you make an effort to do the right thing, it's fine. But I think it's also the government's responsibility to try and roll out rules efficiently so taxpayers or borrowers know what they need to do.
I couldn't agree with you more. And they do actually, again, make the provision that says, hey, we know we are driving and making the rules up at the same time. We get that. Yeah. And there is a recognition that it's a moving target in terms of rules. So you're absolutely right. The change in ownership was a little late in 2020, but they were trying to do a lot at once.
I'm going to jump in here because we have covered a lot, and there's a concept that we haven't really sort of dug into, a couple, and some that I know have come up in questions. I also have a number of questions I haven't actually been able to read yet in Q&A, but let me put two out here. One is this definition of economic uncertainty. And in particular, I've gotten a question from someone who essentially said, look, I applied for a PPP loan round one back in 2020, got the money, but I did way better than I expected to do. What is that person's obligation at this point? If they spent the money on payroll, can they still seek forgiveness? And if you don't seek forgiveness, what are the terms of the loan? And I'm going to try to catch some of the questions that came up in chat as well.
Yeah. But this is a great, I am sure Paul and Linda are going to echo, like, this question has come up countless times with countless clients, right? Because everyone went into March and signed that certification saying, I have need, because they thought everything's going to go bad, right? The bottom's going to fall out from everything. And then a lot of, certainly law firms, right, had amazing 2020s, right? They had more business than they knew what to do with. And so it presents a real, this certification, right, of necessity, the need for the money presents a real conundrum. My position, and I think Linda and I have talked about this before, my position is and we don't have guidance on this, but I think the only rational way to interpret this is to say, look, if in March you thought the bottom was going to fall out on your law practice or your restaurant or whatever else, right? If you believed at that time that you needed the money, you were okay, right? And you're okay to sign, say we needed the money. Now, if you had a fantastic year, that doesn't change the fact back in March, that was your belief.
Thanks. I also have a number of questions in chat, and I'm probably not going to get to all of them, but that have to do with gross receipts and the 25% reduction in gross receipts. So
can I just link those two together, if you may? So what's the worst thing that would happen if you got that money and you didn't need it? The worst thing that would happen, I hate to sound like a used car salesman, but the worst thing that would happen is you get 1% money from the federal government, and depending on the date of your loan, it's a 2-year loan or a 5-year loan. Well, as of today, no one can say with any confidence when they're going to go back to the new normal. So the worst thing that happens is you have the cheapest loan from the most stable lender of record that you can sit on and pay 1% interest. You can't get that deal anywhere else. That's the worst thing that'll happen. If for some reason you want to pay it back, SBA is happy to accommodate that. So there isn't really, it's not like you're going to get a penalty or go to jail if you made a good faith certification a year ago and things got better and you want the capital cushion to make it through the next few months of uncertainty.
Mm-hmm. And did I hear you correctly that the interest rate on these loans, should you not get forgiven, is 1%?
It is 1%.
That's,
I challenge
pretty
anybody
good
to find a
deal.
1% loan from a commercial lender.
Pretty good deal. Gross receipts. I've got a question in chat asking if it's 25% reduction of all quarters or just at the end of 4 quarters. I also have a question about whether or not, if you got a first round PPP loan, if the sort of draw on that loan gets included in your gross receipts.
Well, the second question is a very easy one, right? The draw does not get included in gross receipts.
Okay, good.
SBA.
Glad we got one easy one, Linda.
That's right. That might be the only one of the day. SBA issued a bunch of FAQs today that give a lot of good examples on reduction of gross receipts, and there's a variety of different fact patterns, but I think generally you have to compare 2020 to 2019. If you're not a calendar year, I think you have to, kind of convert to what that would look like for you.
It's comparable quarters, 25% reduction, comparable quarters, 2019 versus 2020. So I have had this come up multiple times. If you had a record year in 2020 and yet in Q1 2020, it was 90% down on Q1 2019, theoretically, you could apply and get funding. You need to remember that the name of your firm will be publicly available as and when this round is done.
Yeah, I think
you don't have to test.
Go ahead,
Sorry,
Chris.
let me just one more point. I think in the guidance that was released earlier, it said you don't actually have to test each quarter. I think for small, there was some concern that for small businesses, they may not have quarterly receipts. So I think the guidance also says, look, if you can produce tax returns for 2019, 2020, showing a delta, like that you had only so much money in 2019, and then it was 25% down in 2020, then you're okay as well. So I think for small businesses, you don't need to worry about creating financials, that your tax returns will be enough to do that.
Mm-hmm.
That's solid advice. Thank you. Another quick question on timing, and then I want to move to a concept, this concept of round 1 versus round 2. Someone asked when the portal will be open for all banks, not just CDFI loans, which I guess kind of gets to when people can apply if you're going to apply from your normal financial institution, which I assume is probably advisable.
Already open.
Okay.
Depending on your bank. Depending on your bank, it was open as early as last Thursday or Friday. It depends on the individual bank and their website readiness.
And banks are creating their own applications. Is that correct? My understanding is that this is, the SBA is kind of administering it, but really the heavy lifting is being left to the banks. Is that fair, Paul?
Since we're with lawyers, I'll be accurate. There are many banks that are engaging third-party software firms that specialize in secure websites, because if you think about it, we are giving compensation and financial information that's particularly sensitive over the web in mass at the same time. So it's a pretty juicy target for hackers. So the large banks are using third-party services to do that, yes.
Interesting. So I want to shift gears a little bit. There's been a lot of talk about round 1 versus round 2. And, sort of, do you have to have received round 1 funding and have had it forgiven in order to apply for round 2? If you apply today, are you applying for round 1 or round 2? How does that all work? Why don't I start with you, Linda, and then go to Paul, and then Chris, if you've got anything you want to add.
Sure. So if you didn't take a draw in round 1, technically you're not taking a second draw now, you're still just taking a first draw. You can take a second draw if you took a draw in round one that wasn't yet forgiven, but you have had to have exhausted all of those proceeds, right? So the forgiveness piece of it isn't a limiter in your ability to reach out and take a second draw. Let's see here. I think for some borrowers, because of the parameters around reduction in gross receipts and so forth, it might be advisable for them to go back and maybe take another bite at the apple on their first loan if they haven't yet sought forgiveness, right? They can request that to be expanded. But for some borrowers, maybe they didn't qualify, maybe like a C6 organization, right? It seemed they were excluded from the first round of funding, although what I read now seems like they qualify for that as well, provided other criteria is met. So I think that it will be important to evaluate, the facts, specific facts, and then consider whether you should try to increase your first loan amount if that's an option, or whether it would be more advantageous to take a second draw.
Thanks.
Right. And let me
Go
just
ahead.
add to piggyback on Linda, I think this is particularly applicable for law firms, right? Because there was real concern about whether partners at law firms could get the PPP loan, right? And when it first came out, we thought, no, just employees. And then we thought, well, the partners have to go out and get their own PPP loan, right? And then by the summer, it was resolved that partners, their payroll costs, their draw, their guaranteed payments were part of the PPP calculation, the loan amount, right? So I think, for the people that are the lawyers listening here, right? I think this goes to Linda's point. Where did the partners not get in the original round? So do you want to go back and expand your first round to include those partners, right? Or when you go back the second time, are you going to include the partners? Will that push you over 300? I think there's a lot of moving parts here, certainly for LLPs that are thinking about trying to get more money.
And one wants to remember that in the first round, you could have up to 500 employees. They've closed the loophole. So if you want to go back and get more money, it's got capped at 300 also. Whether you do a revised loan amount on PPP 1 or you do a PPP 2, it's the same cap, 300 employees.
Okay. I think I will save this question. I'm trying to look through some of the questions in chat, and there are a lot, and many of them are sort of specific to folks' particular circumstances. So we may have to do some follow-up after the fact. If you do not submit your question anonymously, we're happy to do that. Someone did ask, though, in chat to review the amount of time individuals have to spend the loan. If I recall, originally it was 8 weeks, and has that changed? I am sorry, I didn't address that to anyone in particular. Linda, you want to take it?
Yes, so that did change. I think you have up to 24 weeks, right? Yeah, 24 weeks to expend the loan proceeds.
And something that I know is on everyone's mind, and then I want to shift gears a little bit and talk about documentation. But why don't I do a lightning round? Chris, Paul, then Linda. First time this program was announced, there was real concern. And in fact, as I understand it, prior to an extension, the program ran out of money. It's been expanded to include new potential borrowers. Any sense of whether it's going to run out of money again? And I realize that that's really asking you guys to look into a crystal ball, but it's one that I think is on many people's minds. And I guess that's kind of counterbalanced with, if you believe it's going to run out of money, then that puts a little additional pressure on to apply quickly. But if you don't, then perhaps you can be a little more relaxed in communicating with your lender. Thoughts, Chris?
Well, I just read this morning, Bloomberg, it's 284 billion, right, is been used to fund this round, right? And I don't know I don't know how much was set aside in the first round, but I think there's a lot of small businesses who are really suffering, right? And it doesn't appear we're any closer to being out of this. So I think that 284 is going to be exhausted. I wouldn't be surprised if it's exhausted relatively quickly.
Paul, do you agree?
So ignoring politics, In 24 hours, we have a new administration. The new administration has sent up a neon signal that says this refunding in December is a down payment. So I do not like to predict the future, but I would say there is a probability greater than zero that there's going to be more money to recognize what Chris just said so eloquently, which is there's a lot of fundamental business and employers and employees that are suffering. I know that there is sort of a mad dash to get every application in as soon as possible under PPP2, but I envision there's going to be more funding, and the funding will have, hopefully, like this one, some thoughtful provisions about the access to companies that really can demonstrate the need, as opposed to, you know, money just flowing from the fountains. So I do expect more money. So if a company doesn't get at it, I think there will be more funding.
Linda?
I agree with what they've both shared. On top of that, I think that now, because you're able to coordinate some of the other relief provisions, some of the different credits and other loans with PPP, it's possible that people who thought they were excluded from applying because they had been, right, up until the new legislation, so I think you have potentially those borrowers that before didn't think they could have it because maybe they did the EIDL loan or took some of the credit, employer retention credits, and now, it's pretty clear they can do both. So I don't know if the money will run out, but there still seems to be a great deal of need. So I wouldn't be surprised if that's the case.
And I apologize. I was trying to multitask and look at the chat. Am I correct that borrowers can elect to have their sort of spin down period be between 8 and 24 weeks? And is that a change from the prior program, or is this a new spin down period?
I believe that was enacted under the original, or revision to. I don't think that's new guidelines or new guidance that's come out, but it's still in effect.
Excellent. So I've got, and we may or may not be able to get to this, and if it's too detailed, let me know. Has eligibility, and I want to tackle it here because this does have to do with who can apply. Has eligibility for debtors in bankruptcy for this new round of PPP loans been addressed? Can debtors in bankruptcy successfully apply for this new round of funding?
I am not the bankruptcy expert, but I know there are provisions for debtors in bankruptcy for this.
Yeah, I don't know. I don't see why not. I mean, I don't recall seeing any explicit prohibition.
It does talk to it. I just don't recall what. I know it doesn't say no. But I know that there are specific guidelines about what's given as an example.
Right.
So I think it is contemplated.
And it would make sense from a public policy perspective, right? The goal is to try to keep folks afloat and keep individuals employed to the extent possible and minimize the economic impact of the pandemic. So I want to shift gears a little bit and talk about documentation, which is something that all three of you in your respective professions care a good deal about. And I think we can take this kind of sequentially, starting with what sort of documentation do you need to apply? Paul, I'll address this one to you, and I guess I'd ask it, sort of in two pieces, right? There's the 150 and below and 150 to 2 million.
So one other thing that is new is the borrower, if they're applying for over the 150,000 threshold, need to sign an eligibility of need form. So that needs to be done at the application time. For borrowers after the fact who are applying for 150 or less, they will also need to attest to the need in PPP2, but they don't have to do it as part of the application process. And so that's one thing that is different. The other thing is the documentation is relatively straightforward. They're looking for things that are consistent with what any mainstream employer would be providing: tax returns, year-end and quarterly payroll tax filings, employment reports, and to the extent that there's some kind of payroll firm, Payroll firms have all designed reports specifically for documenting eligible payroll costs and the company's ability to document what it actually spent relative to what was expected to be spent. There are some glitches in some of those systems. So the employer is responsible. You can blame your vendor all you want, but if you're the employer, you need to make sure they're right.
So that's what you need to sort of get in the door. You've got your money and you, let's say, spent it in the period that you designated, and then you want to seek forgiveness. What do you need if you're looking for forgiveness? Linda, why don't I ask you this one?
Sure. So, you are going to need to demonstrate, how you spent the monies, right? So you're going to need those payroll, same types of records that you needed when you applied for it. You're going to have to go through the calculation of FTEs, full-time equivalents. You're going to need to demonstrate gross receipts reduction under the new round of funding. I also would suggest, although they might not ask and collect it, as Chris pointed out earlier, there's a lot of drivers, right, that are informing decisions that are being made about uncertainty and such. And so I have been advising clients to keep some sort of a chronological narrative about, decision points, right? What was, besides what we see on these canceled checks and payroll tax returns, what else was happening within your industry and caused you to sign the need document or the certification.
And so, Chris, let's say everything goes smoothly, the IRS can always come back and audit you, right? So I'll start with you, and I'd like to hear from all of you, what sort of documentation are you advising clients to just hang on to, indefinitely? And I'd also like, while you're answering that one, if you don't mind, and have you seen any audit activity? At one point, I think there was some talk about if you borrowed less than $2 million, you would not be audited. I've heard, in fact, that loans at much smaller amounts have in fact been audited for fraud.
Well, let me address the first question, right? I think it's important for the business to really make an effort to document that there is need. I think the key question is need, because it's such an amorphous question. So, you've got to have board minutes, right? Where you sit down and you say, hey, look, we are resolving as the board of the company, or if it's a partnership, right? You have some resolution for the partners where you say, look, we have looked at the financials and we believe that we have a need for this, right? And these are the following reasons why. So then you have that contemporaneous documentation, right? And so whether it's the SBA auditing or the IRS, if you have contemporaneous documentation, that's always better than 2 or 3 years down the road when you get audited, right? And then you have to produce that stuff. Because if you have something at the time, I think that's the strongest evidence. So my advice is to, if you're not observing corporate formalities as a business generally, that's bad, right? But it's particularly bad with this SBA stuff, because now you got to show, right, that you really are having those board meetings and you're making those decisions, or the partnership is passing a resolution that it does need this. So I guess my thought would be, do what you can to document, apart from just the application, the actual the corporate or entity minutes to show you need this. I haven't had any clients. Sorry, let me, and I'll just respond to your other, and then Paul, jump in. I haven't had any clients subject to audit yet.
And just to build on what Chris is saying, I've worked with SBA programs for a number of years before PPP was ever thought about. They look for resolutions. I know you're supposed to floss every day and you're supposed to do your corporate resolutions and have your documents signed, and companies don't. I get that. The SBA naturally looks for those things, and if you don't have it, they want it. So it's better to just get your housekeeping done now when it's fresh.
Anything to add, Linda? And have you seen any audit activity?
haven't seen audits, but there certainly is chatter that, obviously the program is ripe for fraud. And I think that we should expect that the review level will eventually go well below the $2 million threshold, right? That it's, government dollars, and there's going to want to be some measure of accountability that the funds were in fact needed.
So I'll give you some numbers to answer your question, Ona.
We love numbers,
yeah,
especially from a banker.
yes. Lawyers and numbers are a great mix. Absolutely right. So in December 2020, the SBA fraud hotline received more than 100,000 complaints when in the prior year they had 742 about fraud.
Wow.
The FBI Internet Crime Complaint Center had 26,000 complaints specifically concerning COVID-19 and PPP-related fraud. The House Select Subcommittee on COVID Crisis has identified more than $4 billion in questionable loans. So
wow.
let's
are big
just
numbers.
Let's just say there is a new sub-industry of auditors who are going to be focusing on this. And again, if you didn't have perfect accuracy in how you did your employment tax in a weird year with a new vendor under stress, they're not concerned about that. They're literally concerned about fraud. So there's plenty of time to be able to get your homework done right, check your homework, show your work, get your docs in order. But there is already a large scope of audits, not millions, but a large scope of audits where they see things that the pattern is questionable.
And I've heard from all of you, I think, at different times, that the time to document is, as Chris said, contemporaneously, when it's fresh in your mind and you know why you're making the decisions that you're making, as opposed to trying to recreate it 6 years later when you have to explain. So I think that is a solid advice. I would like to sort of do two things in the time that we have remaining, three technically, I guess. One, I want to talk a little bit with you about, sort of other areas for relief and the ways in which the Paycheck Protection Program, or PPP, interfaces with some of the other relief available. But before I get to that, let me just go sort of round the horn and ask if there are other areas where you were looking for clarification and didn't get it, or other areas that were unclear that have been clarified, with the caveat that I understand that new guidance from the SBA just came out today, and so let's make the timing up until that new guidance. I'll start with you, Linda.
Yeah, I think one of the biggest answered questions for me was the notion that expenses paid with PPP funds were going to be deductible for the borrowers, right? So I think initially when the discussion was that the loan forgiveness wasn't going to be COD, it seemed like, okay, when. But then shortly thereafter, there was discussion, that's not COD, but then there's, no ability to deduct the expenses. So I think that's very favorable for borrowers. California, however, hasn't conformed to that position yet. And we don't know if they will or they won't. So, I think that's going to be problematic for some. That's probably the biggest nuance that
the tax treatment
has come out.
Yeah.
Yes.
Paul, anything you were looking for and got, or were looking for and still don't have?
Well, we were looking for clarity on taxation of forgiveness, and to its credit, the state of California in October of 2020 was very clear that forgiveness is not taxable income, which is great. It took 2 more months for the federal government to say the same, but in the intervening time, the state of California said the expenses, as Linda said, are not necessarily deductible. So it would be nice that big health warning at PPP when it was unveiled, it's all deductible, if we got some clarification at both federal and state for all the implications. There's a lot of discussion about this, and so now more than ever, a really thoughtful tax advisor is critical to see opportunities, not just, questions.
Chris?
Yeah, I agree with both Paul and Linda. I think we were hoping, that there was this debate that there was language, congressional intent showing deductibility, and then so we all thought this would work, and it came out, I guess. And so, but the one issue that I think we're talking about what we found, what's left unsettled, and I don't know how the SBA could do it, that it goes back to this need question, right? There's still a lot of people who are real apprehensive about what to do, So let's say that in March, you said, March last year, we really think the bottom's going to fall out. We need this money. And then you had a bang up huge year. Should you still, ask for forgiveness and say, look, we're not going to treat it as a loan. We're going to get it forgiven. I mean, that's the real question for these businesses that really did well. Should they just say, well, now we're just going to treat it as a loan? We don't have any guidance on how to, because I think there's a lot of people in this particular position, and I guess if SBA gave some indication of what possibilities are, that would really provide some comfort, right? Because I think people are really concerned about whether they should ask for forgiveness, right?
Yeah. So back to the original definition of need. Go ahead, Linda.
I think so. And, there was the safe harbor certification going back. So need to fulfill or need for ongoing operations was part of the first language, right? But you didn't have the additional need documentation as part of the SBA package. And then they provided some safe harbor guidance in terms of liquidity and, when an organization would need to, again, we don't have specific answers, but I would think that if your contemporaneous documentation supports that, during the spring months, there were times when, cash flow was a problem and liquidity wasn't available from, the assets of the organization. Maybe the fact that things improved in Q4 aren't as relevant. And so I think that just kind of building the story, the fact pattern, and the supporting documentation to support the application and request for forgiveness is just crucial.
And document, right?
Right. And if I may go back to Chris's point, because it maybe wasn't as obvious as it could be to the audience, which is 2020 was a year of dramatic change and uncertainty. Mm-hmm. Companies may have had a fantastic 2020 and sitting on a pile of cash. That does not mean they're going to survive 2021. And so part of the quandary of whether you apply for forgiveness is not, I want to steal money for free. It's, can I survive? Can I maintain and stabilize employment, maybe even grow? And so one of the things Chris said that is very important, I think Linda made reference to as well, is there are really specific rules about changes in ownership of companies. So if you had a bang up year and you're going to acquire another law firm, or one of your clients is going to acquire a competitor, you kind of want to know that before you get into all the details, because frankly, there's a lot of attorneys that don't realize it because it didn't get a neon advertisement about its unveiling. And I think Chris made reference to a very important point there.
Thanks. So shifting gears, this isn't the primary topic of our conversation, and we will spend some time going through, there are now 30 questions in Q&A, and I'm behind in reading them, but and we've hit some of them probably. But before we get to Q&A, and this is primarily for the benefit of the audience, I'm going to ask you guys to talk a little bit about two other programs, in particular, the Employee Retention Tax Credit and how that interfaces with this program. And as Paul mentioned earlier in our conversation today, the Economic Injury Disaster Loan Program. And if any of you know anything about any kind of relief available kind of at the state or local level, if you can touch on that as well, we'll go there. But for the benefit of the audience, we are going to go a little past the top of the hour. We're going to spend our conversation on, as I said, just touching briefly on these other programs, since they're beyond the scope of the PPP, but because they interface and are other sources of available assistance, I think we'd be remiss if we didn't talk about them a little bit. And then we'll go and see which of the questions in the Q&A that we can cover, and then we'll wrap. So why don't I start, Chris and Linda, with maybe you, Chris, and then Linda, about how the employee retention tax credit interfaces with the PPP under
I'm
the
going
new
to defer to
rules.
Linda on this one. I don't know it. I'm going to defer to Linda on this one.
In that case, I call on Linda.
So the employee retention credit is an opportunity to essentially reduce your payroll tax deposits by, there's calculations, right? I think it's up to 70% of the first, or it's up to $10,000 per employee, right? And you have to have a reduction in gross receipts. And again, you measure quarter over quarter. So you claim the benefit either on your quarterly payroll tax return by not funding a payroll tax deposit, but it really is a savings in wages. It's not like a payroll tax deferral. If you don't have sufficient payroll tax deposit due, you can ask for an advance credit by filing Form 7200. And then when you file your quarterly payroll tax returns, you sort of reconcile all of these things. There are prohibitions against counting the same wages for PPP and the employee retention credits. So you have to, be careful that you're, how you're measuring. And then also, unlike PPP, an employee retention credit actually is an add back to income for income tax purposes. So you don't get a tax deduction equal to the amount of credit that you receive. So I think that's an overall summary. Oh, and the program now is been extended to July 1st of 2021.
Oh, that's quite a long ways, because am I correct that PPP is only through March? But here's a core question. Can you participate in both? Can I both take the payroll tax credit and participate in PPP?
That's right. Yeah, you just can't use the same wages in both calculations.
Got it.
So different periods of time.
Paul, Economic Injury Disaster Loan Program, which for some reason I missed it the first go around, wasn't particularly focused on it. How does that interface with PPP, or does it?
It does. So the SBA has been around for more than a year. It's been around for about 65 years. And one of its core programs, most people know it when there is a hurricane or a flood. And one of its core programs is what's called the Economic Injury Disaster Loan. So if you follow the news of a hurricane coming to the Gulf Coast, you probably have heard about economic injury disaster loans helping people stabilize and get them back on their feet. The government has officially declared COVID an economic disaster. And so it's the moral equivalent of a hurricane in terms of regulatory treatment. So the good thing is, unlike PPP, which is about stabilizing employment, which is good, and that's a great tool to accomplish a very specific goal, which is critical. The economic injury disaster loan is focused on stabilizing the business. So employment is not a focus. It's actually focused on eligible borrowers can apply. Normally in SBA loan programs, you have to literally have documentation to prove you can't get credit from a commercial source. That is suspended for this. So if you are normally a creditworthy borrower and you apply for the economic injury disaster loan, you can get a loan that is defined as based on the amount of working capital your company normally has. And you can get up to 6 months of working capital, up to, I think it's $2 million. What the SBA was doing in terms of flying the plane in a hurricane, not to use too many metaphors here, was they made a lot of idle loans available in 2020 really quick for a relatively small dollar amount of $150,000 to a lot of companies. And I have a lot of clients that did that. And they got the money like in less than a week, which is fantastic. in the December legislation, the EIDL program, which had run out of funds last year, was replenished with funding under the new legislation. And again, not to sound like I'm selling used cars, you can get a loan for up to 6 months of working capital, up to $2 million, at a rate for commercial organizations of 3.75% for up to 30 years.
Wow.
And to make it sweeter, under the legislation related to the CARES Act, the government is waiving all payments for the first 12 months of the loan life, interest and principal. Can't find that anywhere else. That is a rare opportunity. But obviously, the business needs to demonstrate that it's been impacted. There are standard underwriting requirements in terms of tax returns, financial statements, et cetera. But it really is a very valuable opportunity for businesses. And I've been working with a number of clients that are considering PPP2, amending PPP1, but also taking a look at the EIDL loans, because the dollars you can determine as a loan amount under PPP are a lot smaller than the dollars they need to survive. And not a lot of banks are making credit available, whether you like it or not. In the cold, hard world, there's a lot of banks that have cut back on their credit availability. So that is something to consider. And if, as we talked about with Chris, if you have a fantastic year, you can prepay at any time at zero cost.
And the big difference, if I'm hearing you correctly, though, is, sort of, it's not linked to your payroll costs at all.
Has nothing to do with your payroll costs.
Working capital.
It's working capital.
Okay.
There's one little detail that I want the attorneys who will all ask, where's the catch? It is, if your loan
there
amount—
always is, right?
Exactly. Attorneys know that. If your loan amount is over $200,000, then you are required to have a personal guarantee of the owner.
Oh, that's a pretty big catch.
That's a pretty big catch. That's why I mentioned it up front. But if the loan amount is $200,000 and under, you are not required to have a personal guarantee. Yet, having foraged in these woods, I can tell you that SBA doesn't have a different form for a loan amount that's less than $200,000. So that's in there.
Interesting.
So there's ways to document conversations with SBA to say it doesn't apply to you, but it's in there.
And you mentioned that there's no penalty for prepayment and the term would be 30 years.
Up to 30 years.
Up to 30 years. If someone opts, I'm shifting gears away from the economic injury disaster loan program back to PPP. What are the repayment? I know you have to spend it within a, either 8 to 24 months, whatever kind of spend down period you choose. Is there any penalty for prepayment if you opt to treat it like a loan? And how long would the loan term be for PPP?
To my knowledge, there is no prepayment penalty if you prepay the loan. And depending on the date of when you got your loan, your PPP 1 or 2, you have 2 or 5 years. If you got a more recent loan, it's 2 years.
Got it.
I think also you would have some differences in how the accrued interest would be treated, right, on PPP.
Yes.
If you seek forgiveness, the accrued interest goes away. If you somehow if you convert it or not convert it, but don't seek forgiveness, right, the accrued interest is payable and the regular terms of the loan would apply.
Yes. Yes.
Thank you. All right. So that is, unless I've left something out, I think the substance of PPP, and I know that we've covered a lot in a short period of time. There are lots of details. I think that the SBA COVID page has all of the application forms and what have you. They have a very lengthy FAQ document. And as you've probably gathered from the conversation that we've had today, everyone's situation is different and there are a lot of nuances and a lot of unanswered questions. That said, why don't I look at some of the questions that we have had submitted in writing here and see if there are some that we can cover before we wrap up today. So this is unfair, but I'm going to start at the bottom just because it's easier. And we've got, how do you show the amount of working capital needed for an economic injury disaster loan?
It's pretty simple. Standard financial statements and, current assets minus current liabilities, unless there's something unusual on your books that would be treated that way and for some reason should be excluded.
Thanks. We've got another one here. The client has been in business for over 30 years as a sole proprietor and does not have any employees. His sole source of personal income comes from the net revenue from his small business, and his main overhead expense is the monthly rent for his business. He has had no revenue since March of 2020. Does client qualify for a PPP loan? So revenue drops to zero.
But he's a sole proprietor, right? And the guidance is clear that sole proprietors, can
Right.
Apply for the loan. I guess the issue would be to figure out, he's got to test, there's a few different tests, but he's got to figure out what was his payroll, right? What was his, what did he make, right? Because if he just paid rent,
Yeah.
He had to pay for groceries too, right?
Right.
I think the guidance indicates he would look to Schedule C, right, from 2019.
Exactly.
Yeah.
Yeah.
And there's probably going to be a question, did revenues go to zero because he went on vacation? Or did revenues go to zero because there was no interest or engagement by his normal customers?
Or he was shut down, right?
Or he was shut down,
a gym or a restaurant or
yeah. I have clients
right?
that are in that case, but I wasn't sure the context.
Nor am I. I'm making it up. Any tips on how to demonstrate what the funds were spent on if you are a sole proprietor without payroll?
I would suggest if they're using QuickBooks that they set up a class and use class tracking in QuickBooks, right? And just code all of their qualifying expenses to that PPP class so that they could generate a report pretty easily without having to, add up paper checks and such.
Thanks,
I can
Linda.
tell you a lot of companies open bank accounts to do this. You don't use bank accounts to reconcile and prove things. You use accounting systems or quill pens or something. Don't bother opening a bank account.
That will save some people some red tape, I'm sure. So here's one for you, Chris, really for all of you. But what about federal prosecutions? Have there been prosecutions under the False Claims Act against businesses for making false statements to their banks when applying for the PPP loan? Do we know that yet? Have we seen it yet?
Geez, I don't know. I know that there's in the news, there's been a number of reported cases of already fraud charges against putative borrowers, right? There was a guy in Florida who was buying Lamborghinis and this sort of stuff, right? So, but I don't know if it's on the False Claims Act. I don't know the mechanism that the government's using to go after
So the
this.
DOJ at the end of December had 80 individuals criminal charges brought against 80 individuals for suspected fraud in connection with applications for CARES Act relief implicating $127 million of funding. And the SEC brought 7 COVID-19 related fraud actions and opened more than 150 COVID-19 investigations.
Wow. So it's out there. The prosecutions are happening.
Absolutely.
I don't know if they're False Claims Act or not, but
don't know.
Yeah. Okay. If you received an EIDL, Economic Injury Disaster Loan, do you have to exhaust that amount received to be eligible to apply for round 2 of PPP?
There is no mention of having to do that.
Okay.
You do have to, but you do have to have exhausted your first round of
before
PPP,
you can apply
right?
for round
right?
2.
So exactly. So
Got it.
Well, you have to either exhaust or plan to exhaust round 1 of PPP
before dispersed.
But idle money, you don't have to use up to be able to apply again.
So I should be thinking about those as
they're parallel lines.
Yeah. Okay. Is the time period for payroll used to calculate the second round PPP loan the same as for the first round? That's interesting. Linda, you got a thought on that one?
I'm not sure I'm tracking with the question.
I'm guessing that they mean, I'm not sure either. Maybe we'll have to get back to this person. They are not anonymous, so we'll get back to them.
Okay.
If an employer is closed, they're a restaurant, a bar, a gym, and they get a PPP loan, should they continue to pay furloughed employees in order to reach the 60% payroll requirement for forgiveness? That's very interesting. My non-official, not very well-informed answer is that would be consistent with the public policy purpose of the program. But is there a legal answer to that?
I think if you want forgiveness, you have that 60% threshold, that's clear. But there are things you can do in terms of benefits. There's emergency benefits where you can do things that are more practical than just plain money. And so like you could pay for everybody's Wi-Fi or something. And those qualify as certain types of benefits qualify for that kind of spend.
And if I recall correctly, Linda and Chris, correct me if I'm mistaken here, covering folks' health care, covering their insurance, all those sorts of things, all the benefits that attach to payroll count as payroll costs, right?
Right.
So it's not just cash.
But
Right.
your inclination, oh, Shimmy, go ahead, Linda.
I was going to say contributions to profit sharing or pension.
Right. And I was just going to say, Ona, your inclination is right. The point here is that if the restaurant, doesn't have any customers because they're shut down, the point here is to use the money to continue to keep these people on payroll or pay their health benefits or whatever else it is. So you're right. That's the goal.
I think that's been challenging though, right? Because of the unemployment benefits and kind of the coordination of that. And it's been practically speaking, I think a big challenge for small business.
Yes.
Absolutely.
It's a lot to figure out. So here's another practical one having to do with gross receipts. If you sell some of your business assets, for example, a division, is that considered part of gross receipts?
No, it's not. In fact, there's at least in the guidance, it says that the sale of capital, like a capital gain, right? So assume you sell a bunch of 1231 property, right? Your desks. It says capital gain is not counted for gross receipts.
Straightforward. I'm glad some of these questions are. If you received a PPP loan in round one and an EIDL, can you still apply for PPP round two? And I'm going to guess, Paul, and then you can correct me and tell me whether I guessed right. I think the answer is yes, right?
Could you repeat the question?
You received a round one PPP loan.
Right.
And then you got an EIDL loan. Can you still apply for a round two PPP loan?
Yes.
Yeah. I like it when I'm right.
You are right. And since it's a group of lawyers, I'll say subject to any potential change in regulation, which is real time.
Yeah. Yes. And things are evolving again. For those who joined late, we got new guidance today. Here's one. If used, I guess there's a word missing here. I think covered period on the first PPP loan at 8 weeks. Can you use 24 weeks? Oh, I see. Can you change your covered period? In other words, can you do round one at 8 weeks and round two at 24 weeks for a PPP loan? And my guess here is yes, but what do you guys think?
I think so, yeah.
Yeah. Excellent. Can you separate retainers, unearned retainers, and filing fees from gross receipts? This is clearly a law firm question. And I don't know the answer. Chris, do you?
Well, I think so, actually. I mean, it seems to me that gross receipts means what you've earned, right? What or will be earned, right? If you have a trust account and you put client retainer funds in there, you may not earn those monies, right? And so my thought is that simply the money in your trust account is not actual gross receipts. I don't know, Linda, it's sort of really an accounting question.
Yeah, I would view the retainer as a liability to the law firm until they've provided the service. So I don't think that's gross receipts.
But Linda, if they're on a cash basis for tax reporting purposes, would that make it a muddy?
I wouldn't think so, because SBA is looking at their own guidance, right, in terms of definition of gross receipts, not, although I know there's some overlap in terms of how you report taxes, but nonetheless, I think if you have even lawyers are required to have separate trust accounts to hold their, so it's almost like an escrow type situation. I don't think that would be a problem to exclude that.
Yeah, I just meant for other professional services firm, like it was an architect firm or something.
I think if you have a separate account and set it aside separately, kind of like a landlord who might have
Security deposit or
that's exactly right. But if you commingle it, then that's probably going to be a problem.
Okay, great. Thank you.
So I think we probably spoke to this. The question asks, I think the portal for PPP-1 closed months ago. If so, how could you apply for a PPP-1 loan? And I don't know whether it closed or not, but people can currently apply for PPP-1 loans if they didn't get them in the first round, right? It would be considered a first round loan. Is that correct?
I guess my reading is that you would contact your lender as opposed to going through a portal if you wanted to somehow change the terms of your original PPP. Is that consistent with what you've seen, Paul?
So I think I agree with what you just said, Linda. I think the question was slightly different, though, in terms of applying for a PPP-1 at this time. To my knowledge, PPP-1 is closed, done. So it's first application, PPP-2, as opposed to second application, PPP-2.
Got it.
Linda's correct. Linda's correct in terms of if you want to amend your loan amount for PPP-1, I completely agree. You'd contact your lender. And on that note, on a practical point, it's not yet said overtly in the regs, but I would strongly encourage people who got a loan to go to the same lender for the second round. Don't bother going to a different lender. You may not like them. They may not have a pretty website, but don't bother going to yet another lender.
Not worth the hassle, in other words?
No.
Okay, so here's a question that I actually, it speaks to me, it resonates with me. I'm just curious. This attendee wants to know, under what circumstance would you try to get an expansion of a first draw loan instead of, or rather than, a second draw loan? Any thoughts about, why you would do one rather than the other?
Well, I applaud the person's question, because it's literally my homework after we finish this panel. And so I'm grappling with that very question. I think in the specific examples where I'm contemplating it, it has to do with what the company has done to stabilize employment despite, it's actually a fitness company, so they operate gyms around the country. And so what they've done to stabilize employment despite being opened and closed at different points in time, so that we take a movie of a period of time when they did their best to stabilize employment and serve their customers, as opposed to a snapshot that says we got, 1% of who we employed a year ago. So that's the circumstance that I start with as to why I'd consider it.
Any other thoughts from the panel? No?
Maybe they don't qualify, right, under the new parameters because of the need to measure gross receipts. So that would be, I think, a good reason to go back and take a look. And then if you are going to do that, the changes that were implemented here with this new round of funding, right, there's other costs that might qualify, as well as, to Chris's point, perhaps partners and law firms and such.
Thanks, Linda. So we're going to take two more questions, then I'll give you guys a chance to put in any final thoughts you might have. So this, Paul, you said you should go back to your original lender for round 2. But this person is saying, what if our original lender is no longer financing PPP loan applications for the second round? Do the lenders have discretion as to whether or not they will participate? I assume that if they do have discretion, then the person just has to go to a new lender despite the hassle. But does anyone else have any other advice or further thoughts for this questioner?
There are intermediaries that will help you find a lender of record. that are very practical. So that to me is a demonstrable thing. Just being the person I am, I would just PDF a screenshot that says we don't take PPP loans anymore. So 6 years from now, when they say, why did you switch from Coke to Pepsi as my lender of record? You know.
Yeah, yeah. Very practical. Go ahead, Linda.
Also relevant that, it's not easy for a business to open a business banking account, right? It takes time, and banks want history with their customers and all of that. And so if that were the case and you found yourself needing to start over, some of these other qualified lenders might be a more efficient way to get your loan processed.
And let me just add one more point on it, right? Like, don't forget that the banks are fallible, right? Like back when we had the first round, I mean, they were doing it wrong. There was clear guidance saying, self-employed individuals should be able to get PPP loans, and people were going to apply to B of A or whatever other bank, or Wells or whatever, and they said no, we're not gonna give you the loan. So, I mean, don't forget that it's not like these banks are omniscient. They're making mistakes as well, right? And they made mistakes in the first round. They're going to make mistakes in the second round. So I guess people should be patient.
Yeah, we're all doing the best we can under some pretty extraordinary circumstances. So I've got two. I know I said we'll wrap, but I've got two super short ones. There's a longer, more in-depth one that I think we'll have to take offline. Two super short ones. What additional costs qualify for round two that didn't qualify for round one? I think that's pretty straightforward, and we talked about it a little bit. I think it's primarily additional sort of payroll related costs like insurance and benefits type costs, personal protective gear, things that you do to your business kind of in direct response. One thing that I saw that I thought was interesting, if I recall correctly, if you were harmed in the social unrest, I think that you can also cover those costs. But I would direct this person, I think, probably to the SBA FAQ page. And then super fast is the maximum amount for PPP2, still 2.5 times average monthly payroll. What's the max loan amount if you don't hit the 2 million, which is the max?
The max is unchanged at 2 million, no matter what formula. The way you get to the 2 million is accelerated if your industry code that is typically on your annual tax return has a prefix of 7.2, which means you're in food service or accommodation industry, and your multiplier of eligible payroll cost is 3.5 instead of 2.5.
Okay. On that note, we're at 4:25.
Can I build one thing, health and safety for the public here? If you're the person who is trafficking in these topics, you get the commendable job of dealing with things people don't want to enjoy doing. And so in that vein, I'll just remind you, please also look at your employee benefits to make sure that in particular, your medical benefits may have changed given the number of people on your headcount over time. And there are opportunities and potential cost accelerants that may hit your organization without notice. So while it's fun to talk to us, I recommend you also talk to your benefits broker for your organization and make sure there isn't a little landmine coming your way, or frankly, there are opportunities that are available to companies that were not available before. So for example, if the employer elects so, FSA money that was not spent in 2020 can be spent in 2021.
Thanks for that reminder, Paul. That's maybe another webinar, right? Opportunities in benefits for 2021. It's certainly something that I and CLA are going to be taking a hard look at. I was about to say we're kind of almost at 90 minutes here. I invite each of you to make any closing or final thoughts you'd like to make. And I will also share with our audience that we are recording this and we will post it on our website. And to the extent we didn't get to your questions, I'm pretty confident that any of the individuals on our panel would be happy to follow up with you. And on that note, Linda, why don't I start with you, go to Chris, and wrap with Paul.
Gosh, final thoughts, I guess it would just be to, continue to watch for updates to guidance and new FAQs. They seem to come out very frequently, especially with the new program, right? So I expect lots to be unfolding still in the coming weeks.
Thanks, Linda, and thanks for participating. Chris?
Right. I would say it's all lawyers listening, right? So I know it's hard, but try and be patient. and don't forget to deduct your expenses, right? Because now we know that the first round you can deduct those.
Paul?
I'll just remind everyone of another thing. There are many tools available to you at the federal, state, and local level that relate to funding, taxes, benefits, etc. So it's a treasure trove and it's theirs for your finding. I've learned a lot from Linda and Chris and Ona and the organization. So I welcome you to, use everybody as a resource to share that knowledge. If you find someone, I recommend you come back to CAA because I guarantee there's a lot of other organizations that would love to learn what you did.
Thank you so much. And thank you to the audience. Over 90 of you hung in here for 90 minutes. We deeply appreciate it. Again, we will post this in the next week or so on our website and invite your questions and feedback. Again, on behalf of the California Lawyers Association, the Bar Association for all attorneys in the state of California, thank you and have a great afternoon.